building composites, okay, you could put some science to it, but it's more of an art form. It's not just black and white. I'm not going to give you 3 rules and it just, boom, you just always be able to do it. These markets are random. They're imperfect. Sometimes it's very difficult to know, is this balance or is this not balance? And we're going to go through a lot of examples today and get some real life reps with it, and you'll see. So I'm going to do some examples now, but let me just read through these first. When considering, the question is always, okay, the past 2 days, should I merge these 2 days into a composite, or should I not? Are they not balancing? Okay. Couple things to ask, couple of guiding principles here. Is there strong value migration? We talked about the different varying levels of value migration. Totally overlapping, probably a merge, probably balance, probably a composite. Slightly overlapping, that's where we get into gray areas. It's like, is it overlapping enough? Is it balanced? Is it trying to get away? We'll talk about it. And then strong value migration, totally away. It's kind of obvious that it's not balanced. Along the same lines, how much do the main balance areas overlap? Sometimes there can be a difference between the main balance area in a day and its actual value. So value migration and the main balance might tell a little bit different story. I would lean towards the main balance. What was the story that day? What did the market try to do? Okay, we're going to go into some examples with that. But if for example, we had a 2-day composite and you're considering the current day at the end of the day, should this merge with it or not? If the market had attempted early on to break and perhaps consolidated and then failed and came back into balance and then closed there and kind of consolidated a little bit, but you look at the profile and values overlapping to higher and you're not quite sure, I think based on the way that day traded, the way what did it attempt to do? What did it try to do? It tried to break from balance and failed and returned and started to consolidate. So I'm actually going to just merge those and continue with balance. If you're unsure, merge them to see what it looks like. You have 2 days and you're not really sure. Merge those profiles. Does it form a decent normal distribution? Okay, a single distribution, or do you have a big higher distribution and a big low space? If you have any single prints or anything in there, it's not a merge. It's not at all. And this is a cool example here as well. There can be 2 days that's clearly not balanced. It's not a merge, but then the third day kind of overlaps both of them, and it becomes very clear that you've got this tight little 3-day cluster on the chart. 2 days could not be balanced, and then 3 days become balanced. Okay. So let's go to the charts, and I want to go through these examples here. Was there strong value migration? I want to look at July 12th and 13th, and the 14th through the 17th. July 12th is this day, and July 13th is this day. What's the vote? What do we think? What is the value migration? A little bit higher. Overlapping to higher, right? In my mind, the main balance here on this day is here, right? And this day is here. Those are pretty much on top of each other, right? Pretty much. So let's merge them. Let's test. Let's see what it looks like. So I merge with the next profile. I'm combining the 12th with the 13th. Looks pretty good. Looks like a pretty good distribution, composite value area to use. Okay. I also wanted to look at the 14th and the 17th. Okay. Value overlapping a good bit, but some migration lower. But again, I think these balance areas, this market's really not going anywhere. This market was kind of flat here. So a little bit lower, just like the first one was a little bit higher. But overall, I think that's a pretty good 2-day balance. Okay. So you see how this can be a gray area, right? It's not going to be constantly straightforward. And I've tried to pick out some examples that were slightly difficult here.
Is the merging of the profile something that you can do on any platform, or is that something specific to the platform that you use?
Specific to the platform that I use, that any good market profile charting package will allow you to do this. Okay. Thinkorswim would not be a good market profile charting package. You can't do that.
Recommend any specific ones?
Absolutely, and part of this course actually is a full chart setup and connecting to your data feed, everything with this platform here, Sierra Chart. It's super super affordable. I highly recommend it. It's a fantastic platform. Okay. It's the most customizable platform I've ever seen in my life. You don't just fire up these charts and they look like this. If we want to talk about what you can do, here's just a number of settings that I can control with what these profiles look like, as well as all the graphical settings of whether to show something, what color I want it to be, just everything. And it's a very lean, fast software. It doesn't hog CPU resources and stuff. It's very good. So, strong value migration or not? I think in those two examples there was not much value migration, so we chose to merge. How much did the main balance areas overlap? What was the story that day? What did the market try and do? I have notes to look at July 7th. So I suppose I'm going to look at the 10th here. So obviously July 7th does not merge with what we'd previously had. It's a big gap down day. But the 10th, balance or not, we have almost a similar picture of value migration. It's overlapping to higher. But what did this day do? I split it out to take a look at what happened inside the bars. We opened right here. We rejected yesterday's low, put in even more excess at the low. We pushed into the main balance and value. We retested, we went higher, we broke above value high from the prior day, and then we continued to just consolidate and hold, okay? That's the type of day where you can say, you know what? I'm going to keep them separate. It's not necessarily balanced there, and I'm actually going to take a look at, for the following day, I'm really going to be keyed in on this main distribution from the prior day, okay, as a very good reference. You would never know from looking at price bars. Look, this was an inside day pretty much. We got slightly lower at the low, but it was just 2 days, just almost with the exact same high and same low. But this story here tells a very different story of that value and main balance type of migration, and you know, we see what results in the following days as well. All right, let's look at one of those examples where 2 days do not form a composite, but day 3 would. June the 2nd. Okay. All right, so starting on June 2nd, right here, we have a nice balanced day. The next day is a gap down, and there's pretty much value migration entirely lower. It looks like they're at the same tick exactly. The value low with the value high the next day. The main balance is pretty much clearly lower. In my mind, this market is working lower, and this is not real balance in this market at this time. Probably not going to merge those. Okay. What about the day 3 right here? We open, we trade all the way up, you know, we balance, let's just split it out. We balance here, we trade up, and we put some balance up here, and there's a strong close. But overall, what's happened over that 3-day period? Nothing essentially, right? we have opened, traded higher, came back, opened, lower, higher, balance, opened, balance, higher. So we merge these two, okay, and then we merge all three, and then I would begin to use this area here as the market condition would be balanced, and I'd be looking at how we reacted going forward. Obviously, there's a condition change on this day. We can't get out of the upper end, kind of balance, and then zip through the lower end, which below here, it's pretty much full short mode. That's what we're looking for because it's a change in condition. We're headed directionally. Some common questions that we get: should I combine tons of days that aren't going anywhere? Okay. It depends. We can have different situations, but more times than not, because we want this composite structure to serve a certain role. We want it to serve a certain higher time frame dimension. I could look at crude oil. In fact, let's just look at a real chart here. Something like during this entire period right here, where we're actually not going anywhere during that time, right? So we could say, in a sense, well, that's just a big composite. And it is. But I'm an intraday trader, okay? So this is where we get into kind of some specifics of how I use this versus how other people might or how you might. For me, I'm looking to find, okay, 1.5 day balance and then higher, values higher, 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 2 day balance, right? 2 day balance and then this day breaks, higher, higher, 3 day balance, right? That's what I'm looking at, and I'm determining, because I'm an intraday trader, I'm going to come in and trade this day very specifically relative to this recent 3 day balance, okay? Some people might have a higher time frame and they're trying to swing things for 3 days and trying to do certain things. And so they might want to know what this entire balance distribution looks at coming into this day, and it may paint a different picture for them, okay? They're each their own truth, but what I teach, drilling down into an intraday methodology, I strongly feel that 2, 3, 4 day balances that just form in little areas. Obviously, sometimes we end up with a 9 day balance. It does happen, even for me, but it's a tight balance. They provide key levels that you can trade from, key identification of the current market condition that can alert you to shifts in that condition and when it's favorable to go with a trend and things like that. It just works very, very nicely for the intraday time frame. We could say, yes, again, back to other people's composites and why I don't feel they're as strong. You know, I could look at what the past 4 months of profile has done. How much does that truly help me in the next couple minutes of price action? What's going on there? You know, there starts to be a disconnect. So that's my advice on that. I prefer to go within what I call a bracket, which is what we kind of highlighted from here down to here. This market is trading within what I call a bracket, and then there are individual multi-day balances or composite structure within that bracket. Trend days don't really affect composite structure, okay? We'll talk more about that as we kind of talk about, okay, we have a certain structure. Is that structure still valid, or is it time to say that's old, in with the new, okay? Because we run into times where all of a sudden the older structure we've been using becomes irrelevant, okay? Trend days do not invalidate structure. Trend days are not balance. So if we have a balance area and then we have a trend day that rips all the way through it, it doesn't mean that that's not balance, because a lot of times what you'll see is that trend day that rips through it, and then in the days to come, perhaps we drift back, and then all of a sudden that balance, we're back into that old balance, and it's very, very important, okay? Maturity within composites. I don't know why this occurs exactly, but you see this develop. Composites tend to build until they mature. So you'll see a composite that might, and I'm sure we'll get into this, it might look like this. See that little notch that's out of it there or something? And you'll see, this is 3 days, you'll see day 4 come in here and build that little area out. This happens, okay? I don't know, it's kind of funny, but it does. And then we end up with what we would call a more mature, nice distribution composite with a prominent point of control. It's a Jim Dalton term. Very prominent point of control, okay? A lack of a prominent point of control would be a profile that just kind of is like very flat like that. So it's like, well, maybe this is the point of control, but it doesn't really protrude way out further than everything else. It's not prominent, okay? We often have nice excess on the high, excess on the low, and a big, fat, nice distribution with a prominent point of control, okay? Oftentimes, here's where we get into what might happen even before what I've taught you so far. What I've taught you so far is we have a distribution, we have the value area. It's rotational inside it, but if we get outside it and hold, that's when we look for trend moves, right? If you have a very, very mature composite structure and price opens right in the middle of it, okay, here's our value, and it heads down and it tags that point of control and you see a strong reaction on the tape, you see strong buying come in from there, it is unbelievable. In fact, one of the examples that I used, and I didn't pick it out to be that way, but I was like, huh, as I was looking at it. Remember when we built this 3-day composite? Look at where day 4 drives from, right off the open. That could be like a go, no-go trade, very small risk for fantastic reward, that type of behavior. Or worst case scenario, you can actually see that we drove from there and then spent a couple little periods right here that could not get back into that value, and you could continue with the trend type of move. New imbalances often result from a powerful move starting right from a mature composite point of control. So what we're going to do is build composites, okay? So we'll have built a composite and we're looking at that area, and then all of a sudden we have a couple days and it forms a composite like this. Do you think we should still use level 1 right here? Here's level 2. What about level 1? Well, now it's in the middle of the thick part of a newer distribution that's forming. We're intraday traders. We're going to shift our perspective. We're going to stop using that level. We're going to use this new level. Level 2 is going to become kind of a secondary older level. Okay? So new structure invalidates old. Remember, trend days don't invalidate the old structure. They just zip through it, and we may revisit it and that structure still be very meaningful and useful. It's a change in this dynamic of where we have balance and where we have excess. That is what cuts off an old composite structure and becomes no longer useful. Okay? We are going to end up with composite structure here, composite structure there, and start putting these all over the place, and we have to cut off some because they don't work as well anymore, all that kind of stuff. So people often ask me, which one's more important? I'm trying to develop my hypotheses on the day. What's most important here? Pretty simple kind of 2 guidelines. The more recent, the more important. And the longer the duration in terms of how many days went into building that structure, the more important. Okay? A big 9-day balance is more important than a recent 2-day balance. So for example, let me draw this out for you right now. We have a big 9-day balance area, okay? Here's its value. And then all of a sudden we have this day that breaks down, so it's not a part of it, and then this day balances, okay? So we have a 2-day balance right there. Just think about what is going on in this marketplace. Do you think that I want to get long just because we break above that 2-day balance? No. The big 9-day balance that we've broken down out of, this is probably going to be a head fake and a short opportunity as we retest that structure that we've gotten on this time frame, which is a little higher time frame, imbalance down from.